Hey everyone, Sloan here with another episode of Free Money. Can you believe it? On this episode, we're talking about how to figure out what clients really want with Stacey Kline of Otto Intelligence. She's built a behavioral questionnaire that helps advisors discover their clients' detailed preferences and build portfolios that suit them. We'll talk about what that means exactly, as well as whether she's seen any tangible changes in investor behavior that come from investing in purpose aligned portfolios. We also talk about ways to go under the hood of these preferences when there are multiple strategies that might work for a given client situation. Then, as always, we take questions from listeners. And here's a quick reminder. You can ask us questions by going to freemoneypodcast.com or emailing freemoneypod@gmail.com. This week, we explore whether we talk too much about carbon at the expense of other concerns, whether institutional investors are reevaluating their Chinese investments in light of recent Russian aggression, and how a marketing gambit employed by a fund manager on Showtime's TV show Billions would play out in real life. It's all on the other side of the disclaimer. Take it away, Sharkbait.
Ahoy, Free Money Podcast listeners! I'm Sharkbait Buckley, the Disclosure Pirate, and I'm here to set ye straight about what's going on with this here show. Sloan Ortel works for Invest Vegan LLC, a New York registered investment advisor. Ashby Monk works for Stanford University, Adapar, Future Proof, Long Game, and various startups. All opinions expressed by either Sloan or Ashby are entirely their own, and do not reflect the opinions of their crew or any company. Clients who invest vegan may maintain positions in securities and strategies discussed in this podcast. Advisory services are only offered to clients or prospective clients where Invest Vegan and its representatives are properly licensed or exempted, and a client agreement has been executed. Arr.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar.
Welcome to the Free Money Podcast. It is where we give you the Brooklyn Bay Area consensus about institutional investing that you desperately crave. We're back for the second time this year. What up?
And it's raining here in California.
Wow.
Yeah, which for those of you that are familiar with our climate, we need it.
Yeah,
and
does
I'm-
that mean it's not going to catch on fire there later?
You know, it's funny. Sometimes a lot of rain in a year will mean a lot of vegetation,
Oh.
which will then dry out, and then actually lots of fires.
Yes.
It's so funny that you mentioned that because I was actually, my little ashboliloquy top here was going to be about how hard it is to interpret like the big geopolitical events in terms of what happens to markets.
Oh, yeah.
So like you would think that raining means no fires, right? But it actually might mean more fires.
Sick.
You would think a war in Europe would mean markets get crushed because we haven't had a war there in a long time.
Yep.
But instead, investors are like, oh, there's a war in Europe and it's a pretty bad one, which means the Fed might not raise interest rates at a point.
Yep.
And then, so cause I was just looking at like markets are flat since the,
Yeah. Yeah. Well, that's happened a lot. I mean, and like I woke up this morning to an FT piece where like a bunch of, ESG investors are going, wait a second, should we be investing in defense companies?
I saw that. Like, actually, yeah, maybe. I don't know. Don't take my yeah as a yeah to the answer. Yeah.
Yeah.
The worse it is, the better it is. And that's fucked because to me, it's like, wow, that just shows how unfree our markets are. Right?
Yeah.
Like the markets are actually driven by what people think the government's going to do rather than like what's actually just objectively good or bad. Because I think a war in Europe is objectively shit. Like,
Yep.
trade flows are going to slow down. We're going to have like even worse, like supply chain problems. It's not going to be good. We're going to have more inflation.
We're at serious risk of global famine right now because of this war specifically. I wrote a semi big ass piece on the Invest Vegan blog about this. But like Ukraine, Russia, and Belarus are major parts of the global food supply chain.
No kidding.
And like Russia in particular is like, supplies between like 25 and 50% of three key inputs to the fertilizer market.
Wow.
Fertilizer prices are already up more than 100% year over year. And like for the,
That, like, nope, I forgot. People can't see my face. I'm scraping the shocked face. 100%?
yeah, and that's like on the low end. That's for some of the like the kind of less refined, less good,
I'm
so
guessing farmers don't like put a 2x on one of their key inputs when they're modeling like the years ahead.
No.
But maybe they do. Maybe they're used to this type of volatility.
no, they are not. I mean,
Well,
it's driving some good change. Like it's leading some people to go like, hey, maybe instead of buying fertilizer every year, we'll do compost and manure. But because like we rely so heavily on synthetic fertilizers around the world, like half of the population of Earth is supported by synthetic fertilizer.
wow.
So like a disruption in this will lead basically to the most vulnerable populations on Earth having like exponentially increased risk of famine. And if these don't clear up in the next 2 months, we will start to see effects play out in the ag supply chain immediately, because guess what? It's spring and the fertilizer has kind of like a deadline to get on the plant.
Yeah. It's a fair point. Planet is spinning and tilting.
Yeah,
My
exactly.
Lord. Well, you've heard it here probably first.
Yeah, like everyone's most cheerful.
Yeah. This is what we do. We we pretend that we're giving you good news. It's actually just horrific. Speaking of the news, I've got a little bit of time here before we have our guest. So let me give you some of the news items for your commentary and inform and analysis. I'm going to start with Russia because we've seen a big wave of our stakeholders, the big asset owner investors of the world, making moves.
Yep.
Some of these moves are being imposed. In the case of Norway, the chief investment officer of NBIM said it's too soon. And then his bosses and the Ministry of Finance said it's not too soon. 24 hours later, they were told to divest from Russia. Colorado, the Australian super funds, future fund is winding down was their terminology, which I think is another way of saying, just give us a little bit of time. Like stock markets haven't even opened up yet. In Russia.
We can't sell these things at all. So
yeah,
we're just
we're going to wind it down.
We're putting it in a side pocket, I guess.
Yeah. CDPQ, which is the Caisse de dépôt et consignation de Quebec. my favorite Canadian pension plan in Quebec. Yeah, they are selling out of their Russian assets. And on cue, you had the CPPIB humble brag. And I'll give you the quote here. We made a decision years ago not to have Russia as one of our markets. And the hair flip. Well played, CPPIB. Good job with your predictive capabilities. The funny one here is that Mubadala and Qatar, their SWIFT in Qatar and Mubadala have said they will keep their Russian assets.
Of course
They're very invested in Russia.
Yeah.
And it will be interesting to see what plays out here because Mubadala has deep relationships with Russia and they have a San Francisco office. And so they have deep relationships here. Some of these global organizations are going to have a tough moment.
Yeah.
And so we'll see.
I mean, like, I think that if I was a CIO and I was like, somewhere in the 3 to 10% of my overall thing invested in Russia.
Yeah.
I mean, first of all, I wouldn't be in that position because I wouldn't have invested in Russia. But like, I don't feel like I would necessarily divest here, right? Like, because
it's hard.
Well, it's hard, but also like, it's the literal, just from a pure sociopathic, like money making standpoint. I mean, valuations are definitely pretty low in Russia right now.
You would double down. Is that what you're saying? You're going to put on your Middle Eastern sovereign fund hat. And you're going to double down in Russia right now.
I would say if the peculiar, like the version of Sloan who winds up working there and making them would probably be doubling down right now, not moving out.
Yeah, no, I mean, I won't even do the like classic when when there's something in the streets, you buy.
Oh, yeah, yeah, yeah.
Unfortunately, good
Yep.
Lord, that was inappropriate. Ash.
I mean, well, it's not. It's like it's the adage that's getting quoted all over the time. I think that's from it might be from Lord Rothschild or like maybe incorrectly
That's right.
attributed to him. But it's like, yeah, buy when there's blood in the streets.
Sadly, there is.
There is currently blood in the street, which I mean, like, and I guess given what we opened up the pod talking about how markets are flat since the invasion.
It's weird.
Yeah.
So MSCI, FTSE, and BlackRock also, this is actually maybe a bigger deal than any of the stuff I've mentioned so far,
Yeah.
are going to be removing Russia from their indices. So this
Good.
massive passive block of money is going to have to shift to a somewhat different passive investment kind of focus with no Russia in it. So that's going to affect a lot of people's benchmarks. And so that's probably going to have a bigger impact on portfolios than anything the politics will have. So anyway, next bit of news. I need a soundtrack. Just note to self: we need a sound whenever a new sovereign fund is created. Okay, it needs to sound kind of special, or maybe we could be the cash register
Like
sound.
that, maybe. I mean, we got a little drum life.
Ethiopia, woo! And then I yell the country at the end.
Yeah.
Ethiopia is setting up their version of Temasek. It's called the Ethiopian Investment Holdings. And I think there's a conflict going on in Ethiopia right now.
Yep.
So this is an interesting moment for them to basically say, we need to set up a sovereign development fund with the specific mandate to attract foreign capital. They think they have $150 billion with a B worth of state-owned companies and assets, and they want a Temasek-style vehicle. They pointed out Temasek and Mubadala as role models for what they're trying to do. And that is basically like a holding company that comes in, streamlines state-owned enterprises, and gets them ready for listing and ultimately trading on public markets, with the hope that you end up like Singapore with a bunch of national champions that are just awesome, like the airline. We'll see if they're successful, but it is interesting to see that model continues to gain steam after places like Indonesia, Russia, India have used it to pretty successful outcomes.
Yeah, and like, I mean, the state-owned the story is like as old as time, where it's like, yes, we have inefficient state-owned companies, and we need to come up with a part of the government that like is in charge of running these companies.
Yeah. It's like the financialization of the state. The state is moving into the markets, and the markets are moving into the state. And so you end up with this blend. And the thing that's neat about these development funds, like the Ethiopian Investment Holdings, EIH, I'm now calling it, the EIH, is that their goal is to bring in non-local capital. So they're going to have to go and make the case that these are good investments. And so they don't get to say, look, you invest in this and we give you a little nudge or a wink over there. It's got to make sense, for a private investor to invest, unless they're going to just bring in a bunch of sovereign fund capital from the Middle East, for example.
Stranger things happen.
Then that's what you're going to see. All right. Last bit of news before we get into it is we have a birthday today. And that birthday is for something called the Australian Retirement Trust. Not a real birthday. So I think I got you too excited about it.
I'm like, wow.
Actually, it's my sister's birthday. Fuck. Literally my sister's birthday.
Are you kidding? Are you shitting me? It's actually my sister's birthday also today.
March 4th. My
4th.
sister.
My sister. No, my sister. No, not your sister.
No. Are you fucking with me?
I'm not fucking with you.
Oh, shit.
I'm going to her birthday party later tonight.
Yeah, I was just texting with my sister. Yeah. I think that means they're Pisces.
Yep.
Not that anybody actually believes in that shit, but maybe it means something. Anyway, so Australian Retirement Trust is the merger of Q Super and Sun Super, and it is a behemoth immediately out of the gate, and weighing in at $230 billion. And both of those funds are from the Sunshine State. Do you know which one that is?
Canberra.
Queensland.
I feel pretty good about naming an state.
Pretty sure Canberra, as they
Canberra.
pronounce it,
Mm-hmm.
is a city.
Oh, sick. All right. Well,
Maybe Canberra is like one of those like Washington D.C. type districts. Now that I think about it, one of the big cities. Yeah, you might be right. You might be
being
right.
technically correct, the best kind.
Oh, love it when you get me on a technicality, Sloan. Anytime.
That's
Yeah.
what this.
So we see these organizations in Australia being merged, and it's fabulous because it forces them to be so innovative. And so that's why Australia is kind of the epicenter of pension fund innovation today, is partly because the regulators going around and saying, you merge with those guys, you're going to be gone unless you get good, that's a bad Australian accent. Crikey, you're going to get gone.
You merge with these guys.
You merge with these guys. Again, you got to go watch that SNL clip where they have all of the best movies of Australian cinema. And it's an SNL clip. And one of the classic ones, here we go, is the guy says, any last words? And this woman is dying in bed and she says, kangaroo, I guess. Yeah, sorry about that, everybody. Can we strike all that from the record?
We
don't do editing.
We don't do
editing.
editing. They have a rich, deep, and ancient culture.
They do.
Yeah.
That's not my joke. That was a Saturday Night Live joke.
Yeah, that's true.
It made me laugh out loud. But
we're just saying it how it is. We're just saying it how it is. You know. I noticed that our guest is in the waiting room, which is pretty odd.
Stacey Kline.
Our guest, who is not Australian, as far as I know.
She's Canadian.
Everyone's Canadian. It turns out.
Yeah.
Let's.
What we're going to do with Stacey Kline is talk about impact investing and how we can figure out preferences.
Hi.
How are you?
How are you? I'm great. How are
Great.
you?
How's the weather in Toronto?
Oh, it's a little cold still. Well, some snow.
I see it.
I'm just waiting for
I
spring.
see that little slide out there. I'm looking forward to the opportunity to try that out.
Oh yeah, come on over.
Stacey, we were just introducing you and Otto as the ultimate way of revealing the preferences of investors so that you can help them mobilize their kind of impact mindset. Maybe you could just give us a little bit of background on why you wanted to build Otto before we jump into the questions, and then we'll go through the various product iterations that you're working on.
Yeah, that's perfect. Yeah, I mean, Auto came about really to solve a problem I faced, which was, there I was with some capital to invest. I really just wanted to do that in a way that aligned with who I am and what I care most about. And it wasn't easy. And I thought, wait a minute, like I can't be the only one who's facing this problem. And if I'm not, and if I can come up with, even part of a solution to this problem, then, it's potentially something pretty interesting and potentially scalable. And so, fortunately, I didn't have to come up with this solution on my own. I had the help of some really brilliant people around the table. And yeah, we're working to make that happen.
So nobody would sort of be surprised to hear that this is an important thing, right? Like revealing the preferences of investors seems like a pretty foundational concept when you're onboarding them, especially if you're their advisor. You want to understand what they want to do. The true preferences of individual investors is kind of obviously a good thing. But it turns out that not a lot of people actually take the time to reveal those preferences or actually mobilize them. Like maybe this is about unwinding like why the industry has been structured the way that it is.
Yeah. Yeah. I mean, it's complex. Listen, I think, there are a few things here. First, objects in motion remain unbroken, right? It's like
Exactly.
so much easier to keep doing things the way that, they're done, than to look at things differently. And, the truth is that incorporating the preferences of individual investors takes work. And in certain cases, it kind of runs a bit counter to the model of investment advisory, where it's like, put this person in this bucket. Um, and you know, on the other hand, though, like investment advisory is all about client relationship,
Yeah.
building trust and stickiness. And this, you know, it like really is about deeply knowing your clients and what they want, what they care about. So like this should be, incorporated into their investment strategy. Like, so again, begs the question, like, why the reluctance? Like, because it hasn't been
Right.
easy, right? Like, for starters, traditional client intake just like falls short, right? The current process for KYCs and knowing your clients, it focuses on risk and return on liquidity, but like in this point in time assessment. So like actually discovering what your clients care about, what drives them, their values, their preferences, like it requires more. And then on top of that, if you're looking at like a more sustainable approach to investing, it's hard to action ESG data.
Yeah.
Like, we know there isn't even an agreed upon lexicon for things. Like, what do we mean by sustainable investing, values-based investing, ESG, impact, like let alone standard metrics. So the availability of data on a company's performance on environmental, social, and governance factors, like really doesn't equate to the ability to use this data in a meaningful way as it relates to individual.
Do you think?
So I think that's
Sorry, I was interrupting you. Do you think
yeah.
that like part of this is because the advisors would appear to not know what they're talking about if they started engaging in these topics? Because, like
Sure.
you just said, like connecting all of the ESG data into an investment strategy that you can mobilize. Like, if my client tells me they don't want to invest in munitions, like I don't know how to
Yep.
mobilize that. That's actually pretty hard to do. You know.
Yep. No, exactly. I think, having those tangible little pieces of evidence or of discussion point to be able to bring to your client in a thoughtful way, like it's been elusive right now. There really hasn't been an easy mechanism for bringing that forward into conversation for listen, we all want to sound smart in what we're doing. We all want to be the expert.
I do. I do.
So
Speak for
right,
yourself.
right? Okay, maybe some of us are okay with admitting we don't know it all. But if you're coming to your client as their advisor, as someone who's supposed to have the information, you want to come across as having the information. So this is really what we're working on facilitating at Otto. It's not coming to the table saying, hey, here, we have the solution for how you can perfectly align your portfolio with your investments. It's really not about that. What it's about is saying, hey, client, look, we get you. We hear you. We want to actually learn more about you. We're a client intelligence platform. And we want to use these bits and pieces that we know about you as, part of the main ingredients of your investment strategy. And so what we're really trying to do is equip advisors with these talking points for conversation to say, okay, you client, really, you've expressed this preference to avoid investing in companies that test their products on animals, or, you really care about clean water. Well, here's how I can talk to you about this and how, I can say to you, these are things we can consider in the context of your broader financial goals, and start really thinking about how we can thoughtfully and strategically incorporate these things.
Yeah, I mean, that's really interesting.
Bring
'Cause,
them
like,
forward.
I think that we have heard about aligning clients' capital and their purpose to the point of nausea, almost, right? Like
Yeah.
where like
Yeah.
it sounds great. I mean, like I personally would love to align my capital with my purpose, right? But when you get into the specifics, it seems like it's really a vehicle to learn about the world. And I mean, is that kind of the way that you're approaching, building Otto, where you're saying like, okay, let's sort of learn about what you want to know about and then figure out how to get you more information about that so that you can use investments as a way to understand what's going on around you.
Absolutely. I think that this is really a stepping stone to a whole bunch of like learning and financial literacy and more. This is really about how can you be kind of an active participant in your capital allocation. And, I think, we really do, as you said, here all the time, retail investors really want to invest in a way that's aligned with their purpose. Like, what does that really mean? Like, I think it's sort of assumed now because, in this day and age, we're all accustomed to these like personalized products and services. Like, Netflix, we throw on the TV and there's every show we want to watch, and you want to jump on your Peloton, like, great, go do the class you want to do at the exact moment you want to do it. And, Alexa already knows what you want to buy. So you don't have to worry about that. But when it comes to investing, like, that is not at all the experience. And I think we now have this, like, we're coming into it with this expectation that we're going to be met in our investing in the same way we're met in the rest of the world. And we're not. And so, we really are looking for the same from our investing experience. And I think the retail client has learned that they can be pretty powerful in that. So, what that should mean is kind of more of a knowing of the companies that you choose to allocate your wealth to, and, what matters to you, whether that's caring about the planet or, looking at companies and how they, factor in the communities that they operate in and how they treat their workers. And right now, the truth is it's pretty hard to go out there and accomplish a perfectly aligned portfolio. And that's in part because of, the data and the way the data is right now and our understanding of how to bring that into play. And it's also because, the truth is the factoring in of these factors for companies is still new in terms of how they consider it. And so really, with Otto, it is about how can we facilitate a greater knowing? How can we provide a starting point for these conversations and bring them into, make them more of a focus, make them part of the consideration from the beginning, and not just this thing you slap on at the end as the icing on the cake.
I love that. I'm sitting here chuckling to myself when you were like, why don't we have like the Alexa style recommendation engine? And I was like, oh man, we need that creepy factor in finance where like, you're like, oh shit, that's eerie.
Exactly.
I get an email, Alexa like sent me an alert yesterday. Literally, this is not a joke, that was said, do you want to subscribe to the Daily Joke? And I was like, that's creepy. Yes, I do. Yes, I do want to subscribe to the
Exactly.
Daily Joke. So it's fun.
Well, there you go. This is where Otto is going. Like you predicted it.
Otto, we bring
Otto
creepiness.
will bring the creep factor. Perfect. We were looking for a new
creepy
factor. Yeah.
We know if you've been bad or good. So like the elf on the shelf for finance.
My God, guys, this is outstanding, and I think this is where Free Money Podcast gets a revenue share of some. Use the elf on the shelf idea.
Okay.
Look, I think
Got it.
I love your concept of impact as a means of understanding. Honestly, that's the way we talk about ESG in the institutional world, which is like, think of this as like understanding risks that you haven't quite appreciated. And then also the process of defining goals. I think like part of the reason I was so excited to have you on it is like you're building a platform that allows individuals to actually take the time to define goals across a range of domains, not just like the cash I need out of this investment in 7 years for my wedding, but like a bunch of goals. And I'll tell you guys that institutional investors are also very bad at defining goals. And so as we move towards this goal setting, I think it's going to be really valuable to see, your learnings and how it changes their behaviors as you go through this. And so I'm just curious, like, what are the behavior changes you're seeing, or are you interested in seeing? And I don't know, just react to my random rambling.
Yeah. No. I think it's really, really interesting. And I do think that this does link to behavior change. And I hope it does, to be honest. I think, what we've seen, and this really links to everything we've been talking about, is that when investors are invested in companies they believe in, like, they know why they're there.
Yeah.
Right. And so what that means is that, among other things, there's just more bandwidth to kind of weather the storm and market volatility, right? So having a purpose aligned portfolio really means that you can take a much longer term approach. And I think, Ashby, like this is where there is overlap with what you're talking about. So, you know, when you factor these things in, you're no longer looking at just as one dimension of returns and basing everything off of that. There's just more at play, right? So you wake up in the morning and you see the Dow is down however many basis points, and you're looking at your portfolio on the red and you're kind of freaking out. And when you can take a step back and see yourself in your portfolio or what you care about is reflected, and you've been more thoughtful, and you know, there are more reasons, just more reasons behind your decision making, then it's more likely than you could see this as just a bump along a much longer road than, a valley. You don't have to panic and sell and act irrationally, because it's not just about your short-term gains anymore.
Yeah. Even the time horizon. I mean, I don't want to beat this one to death, but so you're talking
Yeah.
about time horizon. I love that because it allows you not to sell when things are crashing, and in fact, double down when things are cheap. But I also think the process of goal setting and understanding
Yep.
kind of multi-dimensional objectives does something that's very different from what the traditional investor has, which is triangulate your current location. So
Yep.
where you are it should be relative to what portfolio you're holding, how you understand that
Yep.
portfolio, and where you're going. And I expect the process of running through the auto survey and doing that cool swap in and swap out assessment that I've seen in your platform, like people are going to realize their portfolio isn't quite where they thought it was. And that's that like location, like the GPS of your portfolio, the position of your portfolio will
Yep.
appear different the minute you run through your survey for the first time. And it's that changing location of your portfolio that I think will trigger a change in investment behavior. And so that's the kind of outcome that I'm really excited to see. If people get in there, they realize that this portfolio isn't where they thought, and all of a sudden they're reallocating capital.
Yep.
And that's our project at Stanford and many things that I'm doing.
Yep.
We're trying to reallocate capital to more world positive projects.
Yeah, I couldn't agree more. And that really is our, underwriting thesis at Otto, is that when you have the ability to add this other dimension into your decision making and into your thought process around where you're allocating your capital, that that you will make decisions that ultimately shift that capital into companies that ultimately are not only better for the planet and for people, but evidence is really showing that those companies will also outperform. And for a lot of reasons that I know you two know really, really well.
I mean, this is like, I think that the state of academic research around this is like kind of hot garbage. Because like, I mean, first of all, if you just sort of look at the questionnaire, like we did this when I was working at CFA Institute a while ago. We went to the top 40 RIA firms and Barron's. We got all of their questionnaires. They were all the exact same freaking thing, the same 10 questions.
Yeah.
Like, if the stock market was down 25%, what would you do? And like perhaps even more offensively, they would all rely on the client to identify something as basic as how much money they needed in retirement. They would literally be like, how
Yeah.
much money do you need? And then they would build the portfolio around that. This next generation, I think, is front and center for a lot of those big mainstream RIAs who, they have like the grandfather who might have been like an oil tycoon, and not so concerned about, and more concerned about just like, cash on cash return on investment. And then, maybe they have a kid who's a hippie and a grandkid who's an even bigger hippie. And the firm is now wondering, how do we retain those clients? Right. And, I just got to wonder, like, do you think they have a chance in hell at that? Because like, it seems to me like purpose and like alignment with clients like and real goals is not something that you can bolt on later in the game. So I'm
Yeah.
wondering how you think about that, because it seems to me like, smaller firms like mine might be a user of Otto, but also like bigger giant firms might be a natural user of Otto. And you kind of need to, you know, see where you fit into that whole marketplace. I'm curious how you're approaching it.
Yeah, for sure. I mean, this is a massive problem, especially with this shift in wealth that's, on the brink of happening and has in certain cases has started. And I think the stat is something like 83% of capital, shifts when there's a transition in wealth. And so really capturing um, these next gen clients is going to be really important to these incumbents, right? Um, and I think that there's even more competition now with, um, the onslaught of all these retail platforms and a do-it-yourself mentality that's just been enabled by technology. Um, so it's really in that context too. Getting those second and third generation family members to stick is really really hard. Um, and the way we think about auto um, is really as a household product. So I think that to date there hasn't really been reason to bring in those next gens into a conversation or an easy way to do that. Like, how do you approach the matriarch or patriarch and say like, "Hey, we actually kind of want to talk to your son or daughter or grandkids," um, and I think we can see in a lot of cases, and it applies here. Um, a lot of the time, it's like easier to talk to a robot or computer than it is to have an in-person discussion. So, equipping advisors with these pieces of technology that can facilitate that kind of relationship formation and giving a reason for there to be a discussion that bridges generations is I think part of this and part of how we can be a solution there. Um, but I think, there's all kinds of like interesting things more broadly about this problem in the market and how to look at it. And I think, that it's really in part why we're excited to serve financial advisors with Otto and what we're bringing forward. This really could have easily um, been a D2C product, and we chose specifically to bring it to market for advisors. And I think part of what we see is that um, the fundamental difference between an advisor and a robo platform is values, right? There's This is competing with decision making. We're not competing with an algorithm. So, Daniel Kahneman talks about system one and system two thinking, and the robo platforms are the system one thinking. And advisors are not going to compete there anymore. But if you can help a client really understand their values, well, then you can really compete. You know, when there's strong potential for churn in the client base, like what is going to insulate you from that? It's being an advisor who understands your client. And so, like, while clients care about returns, like, let's face it, they care about returns. What they really care about, I think, is staying on track financially. So if you're an advisor who understands your clients' goals and values and where they are, you could always bring it back to this. If the markets can go up, the markets can go down, it doesn't matter. We're still on track. You can buy that house. You can make sure kids have a good education, like whatever it is. So this is where Otto can come in and, and really kind of play into that. And just like one other little tidbit here is when you think about how like relationship formation and how that's been, kind of historically with some of the bigger, with the high net worth clients, it's been built on, sometimes, well, let's take the like really classic example of like golf games or dinners. And, this, that sort of COVID or non COVID, not as much the world we live in anymore. Right. So we're trying to deal with that handoff, like helping to build a relationship that's a bit more digital and a bit less.
Put that on a t-shirt. That's another
Yeah.
good one.
I mean, degulfing the investment industry is like God's work, full stop.
Holy cow. The
Yeah.
golfification investment industry. New objective.
Golfification. That should be
That should be. We're free money podcast, degulfifying.
Yeah,
Uh,
exactly. If anyone out there wants to be the free money merch intern, please hit me up.
yes.
The there's like I think this is, I mean, obviously this is like near and dear to our hearts, right? And like, we're kind of
yeah.
tankies for this idea of like, let's align, capital and purpose. But there's this really interesting implementation wrinkle here where like, I
Yeah.
mean, my way of doing this at my own firm is like, I named it Invest Vegan. The triple moon goddess sigil, my logo, and like, that has some bearing on the kinds of clients that I attract and, kind of the discovery process of coming to me. That's not necessarily the process that, like Halsey Street Investment Management, necessarily would take, or whatever asset management would take. But the way that we do, this specific identified set of preferences here is quite different from, there are two other vegan funds that are, they're doing great work, but they're very, very, very different.
Mhm.
And I'm curious about, like, I mean, maybe not necessarily the example of veganism, but more broadly, like once you identify the preference, how do you identify the solution?
Yeah. And that's really, I mean, the implementation piece is really what it all comes down to, right? Because it's great to say, I know who you are. I know what you care about. It's great to say, I understand how this company scores on these ESG metrics, but like, how do you put the two together? And that's really, um, like, it's exactly the crux of what we've been trying to solve for because, you know, there are tons of companies out there that do a really great job on company scoring, and they're really, really good at that. Um, and there are also lots of ways to discover people, less ways to discover people as it relates to their investments. But um, I think really what's been missing in the market is this way to bring the two together. And that's why, we were talking about at the beginning, like advisors can't have these conversations because there's like no way to connect people to companies. And so, you know, that's our work. And what we do is say, okay, we're going to leverage that great work that these third party, companies are doing on scoring other companies on ESG factors. And we're going to look at that and create a composite and bring it in. And we're also going to create these great tools and surveys and games that help us uncover people and who they are and what they care about. And then, we're going to connect those. So what we really do in our platform is say, okay, here, as a starting point, we identify the themes that people care about. What are the kinds of companies they want to invest in? What are the types of companies they want to avoid? And then, we bridge the gap for an advisor so they can log on to their dashboard. They can, they have intelligence there on their clients, and then they can run essentially an alignment analysis to say, based on these preferences, here's an audit, a thematic audit of my client's portfolio. And, let's say, for example, let's say the client is really focused on clean water, looking for um, increasing exposure to clean water. And the advisor is actually able to then go in and add and do a search, a thematic search to say, which are the companies within, my risk return parameters, and certain market cap that meets these objectives. And let's say Microsoft is one that spikes on clean water. It's not intuitive, but it does. And the reason why is because certain companies like Microsoft that where they don't generate revenue from things like directly from clean water. They're showing up for their communities. They've created partnerships and programs that contribute to these themes. So the advisor is able to say, okay, spikes on clean water. I'm going to see about adding this. But then the advisor is also able to say, well, hey, Microsoft actually has some weapons exposure, and that's something my client didn't want to have exposure to. So, they can then really practically bring that forward to their client and say, listen, like, you have these financial objectives, and within those financial objectives are also your values-based preferences. And like, let's now actually talk about this. Are you okay with having Microsoft in your portfolio? Because it does achieve the goal of increasing your exposure to clean water, but it also adds a little bit of exposure to weapons.
And
And
Jeffrey,
is that something that
sorry,
Yeah.
I went there. I went
Yeah,
there.
no,
you went there?
yeah,
You did it. You
the
did
deeply relevant Epstein factor that
it.
Sorry, I just saw the news that Bill Gates' wife was like
Couldn't avoid
crapping
it.
about how he was hanging out with Epstein.
I mean,
Yeah.
rightly so.
And rightly so.
Yeah.
Very naughty.
Yeah.
From
Rightly so.
preferences to portfolios, I have to tell you, Stacey, I've been telling everybody that I think the big projects of the next decade are translation, that there's a lot of data, but there hasn't been the work to translate that data into something that is implementable.
Yeah.
And as I was listening, you just described it. I think that's what you're doing. You're this like translation layer that takes my preferences and helps me actually mobilize. Right now, we put that burden on the investors, and even the institutions struggle to mobilize it.
Yeah, and
So,
all I can do to
thank you.
reach those investors is blog. Like,
That's
right?
Blog and pod blog.
Yeah, like literally, it's like I mean, it's kind of weird if you think about it. That like
It is.
that's like the most practical storytelling mechanism that exists presently is like write a blog post about a theme
Totally.
and how your portfolio aligns with it.
I once asked a chief
Yeah.
investment officer where they get their capital market assumptions, and the first thing out of that person's mouth was blogs. And I was like, interesting. That's a very scientific, Anyway, Stacey, thank you. I know we've kept you over the time. So awesome. Keep us posted on Otto and when I can, do my own portfolio through the system, and we'll put it up on the free money.
Absolutely.
Yeah, I want to play with it. I'm excited
Me too.
to check it out.
Yeah. Amazing. Well, let's make it
Let's do it.
happen. And thank you so much for having me on. I'm really excited about being here in our conversation, and I'm really excited to kind of stay tuned and learn what gardening.
Oh, this is a good one today. Thank you for the call out. Yep.
Yeah.
All right, Stacey.
Stacey, bye.
All right. Thanks so much.
Bye.
Bye.
I mean, she knows about
It's
the
a
gardening.
cool
tip.
company, dude.
Yeah,
Very cool company.
I mean, that's a very exciting space. Like, I mean, I like, probably like there are so many like old gen questionnaire solutions for advisors that I've been looking at because this is a huge business process issue for me.
Oh yeah, like people are onboarding people and being like, what do you like?
Yeah, like what do you like, and also like, do you have like what is your ability to bear and manage risk, and then also on top of that, like who are you? Are you a good fit for what we do? Should I refer you to someone else?
Yeah.
And like because like I and probably a lot of other sustainable investors want to do that for everybody, not just the rich.
Yeah.
Having an automated tool is a big deal, and I've literally been building my own with like gravity forms on my WordPress site. Like for the last little bit, like that is the level of solution that's out there is like DIY it for yourself.
My gosh, this was our last week's hard thing. Building websites.
Yeah. What I mean, like, the
Build websites. That's what we do.
yeah.
Oh, and this feeds into my hard thing about building stuff. Do we have a sound?
Oh, a sound effect for hard things. Let's see. I don't think we have an official one, but
I thought it was
oh yeah, there we go. It's called Transition 5.
Transition 5. I think the hard thing about building stuff, funnily, like I actually wrote this down. Thank you for the second.
I don't know what happened.
No, I needed two because this is pretty important. Figuring out what people actually want you to do for them.
Yeah.
It's like was literally what I wrote down. And it's so funny hearing her, our guest, because that's everything she's building with Otto is literally trying to figure out, what portfolio to deliver her clients. But I find that is just so taxing, and you understand why Steve Jobs was just like, screw it. I'm going to go figure it out myself and I'll build what I think they want. And only, 1 in 1,000 can get that right. So most of us have to actually go spend the time to actually understand what clients and customers want. But it's very hard to do that.
Yeah. I mean, like, I think that it's, I think incredibly valuable to the, like, financial advisory industry to have a pathing tool for that to help people identify solutions. But like as an investment manager, like as an active investment manager, I'm I'm skeptical about how much mass customization can be done here because like I think you really need like pretty, like boots on the ground type, like holistic thinking about the set of objectives that your clients have. Cause like, I think that, it's exciting to see Otto, like surfacing these concerns, but like, I'm thinking right now about like PFAS remediation in landfill sites,
Wow.
which like I guarantee you that most clients do not have front of mind. And they should, and it's my job to put it front of mind for them. But like I think that, to go from, oh, I like clean water to, okay, there's like a plastics issue that aligns with clean water to there's a waste supply chain that we need to be involved in is a lot of jumps, you know?
Totally.
And like, I think that I mean, that's my hard thing, I guess, is like telling these stories. Like I wrote this big blog post that I mentioned earlier and like put it out there and it's like crickets because who wants to read about why we're heading towards famine?
Not me.
Like, yeah, no, don't read this. It's sad.
You want to have a good weekend, don't read this.
Yeah, exactly. If you want to have a good weekend, ignore investing.org. Don't go
Oh,
there.
I will tell you, I heard you just saying how hard it's going to be to do mass customization. And it's funny because when I say it's hard to figure out what your people actually want, it's a way of saying that you have product market fit in like
Mm.
investor jargon. And that's super hard to find. And
Yep.
the appeal of mass customization is that like your product will just figure out what the market is,
Yeah.
right? And that is such a sexy idea. Like I just am so attracted to the idea that this product I'm going to put out there can customize itself to whatever the fucking market is,
Yeah. I mean, it's great. Like, I mean, if I was like a VC, I would love that.
It's a good buzzword.
It's a great, but and oh, by the way, it's what advisors do.
Yeah.
Like that is what their process is, whether they like it or not. A lot of the time, it's like we have sets of solutions that we path you through, and then we've got the tools to make sure that we can flip switches and fit what works for broadly into your specific situation. But yeah, I mean, I think that there's a limit to it. With when you get into the ethics of stuff, because at the end of the day, you're kind of looking to have like delegated decision making authority to someone else that you can look to like kind of lead you through something. And the metrics that indicate whether that delegated decision making is going to like actually do what people want from it are going to be a lot different from the metrics that cover what's currently in the portfolio.
Yes.
So anyway, metrics are bad. No one should know anything.
Yeah.
After
Elevator music and you're fine.
Yeah, exactly. After studying the problem, I've decided that we should go back to the Stone Age.
Yep.
Okay. Oh, well, it's, the classic. Honestly, and apart from the gardening tip, I would say that this is one of our most popular segments. This is the Dear Ashby segment of the show. It's also where I habitually remind people that they can send us questions on the newly renovated freemoneypodcast.com. There's a very sexy forum on there that you can use to,
My God.
just be like,
Sounds like it's too easy to ignore.
It's almost too disruptive too, by the way. I think like it solves this preference problem by just making a form there, and you can write whatever your preferences are in the form for us to.
And are you telling me that if people ask questions, I'll be obligated to answer them?
Yeah.
Wow.
And like the weirder the better. Like and it's the person who receives the input from the form. The way to get me to ask after your question is to make it funny and or
Get weird.
Yeah.
With it.
The first one that and you can also email freemoneypod@gmail.com, and while you're at it, put 5-star reviews out.
Yeah.
Like,
And subscribe, Like and subscribe.
Like and subscribe. Roll down your window at a stoplight and just scream about the podcast to the car.
Yes.
You know,
What you do is you roll down your window, and then the person next to you in the car, you do that like roll down window sign with your hand, like, and they bring their window down, and then you say, "Hey, excuse me, have you seen Free Money Podcast with Ashby and Sloan, or Sloan and Ashby, technically?"
I mean, you know, it's like it's you know,
And they'll be like, "Excuse me," because they'll definitely think they didn't hear you right.
yeah,
And
yeah,
then
yeah.
you'll be, and then what you say is, "You heard me."
They'll be like,
You know what I mean?
Sloan and Ashby have a podcast. So this is a great. I mean, like this is so front and center for like what we've been talking about here, right? Because like, do you think we talk too much about carbon in sustainable investing conversations at the expense of other equally salient concerns?
I do think that. It's a great question. I do think that. And people often like challenge me on that. I was trying to, when I saw this question come through, I was like, oh shit, it's a good one. Yeah, like we talk a lot about carbon. And part of the reason we do is it's like, you can measure carbon.
Yep.
You can apply it to a portfolio. And in theory, you can change your decision making around carbon intensity and physical and transition risk to climate change. Like, as a role model for dealing with these long-term difficult issues, first of all, it's a big issue. Like, we don't solve it, we're going to have to move underground. So it's useful to solve it. And second, it could be a role model for a bunch of stuff,
Yeah.
but I accept that our focus on carbon is probably crowded out diversity and inclusion and, but in a whole range of the ESG and I impact related stuff. So it's a fair point. I don't know how to get around it right now,
Yeah.
other than to just do our best to continue to measure other things and bring those things into a level of measurement that we're getting close to with carbon.
Mm-hmm. Yeah, I mean, it's sort of the tip of the spear, right? I mean, like important to remember that the financial markets are literally like the power structure of the world, like made like, in asset form, right? So, carbon is a way to think about all those things. And like everyone can think about carbon, in a way that like, maybe the people who are thinking about water will be able to lead the industry forward more, I mean, and it is really cool. I should have asked Stacey about this, but retail investors have really led adoption of ESG.
Yep.
And I really regret. We'll have to have her on again to ask her about that. About how Otto plays into that. The next question is very ESG. Also, are you watching Billions?
I need to, because
You do.
I admit that I like the idea of watching a hedge fund billionaire is like just romping around has kept me away from it. But enough people have told me I probably need to watch it.
Yeah, this current season might be a good place to start because without too many spoilers, they like a new person takes over this hedge fund, right?
Okay.
And he's like, an impact investing guy.
Oh, wow.
Right. And so he takes over, but he's like, he's the villain.
Right.
And
of course
he takes over this hedge fund and he's like obsessed with his image. It's got like, I mean, it's basically SAC capital or 0.72.
Yeah.
And this new guy fires all of his clients. He's like, you guys were totally fine with the old management style where we were like trading on insider information and doing all kinds of sketchy stuff. And you know what? For that, I'm not managing your money anymore. We're only going to manage money from people who meet our ethical standards. If somebody were to do that IRL, how do you think people would respond to it?
I think it's genius. One, every limited partner in that fund would anyways be reassessing and probably thinking about pulling their money out with a new management team and a new style.
Oh, that's
so this hedge fund icy veined jerk off is getting ahead of it. Mm-hmm. and sort of getting ahead and saying, I fire you, you don't fire me.
Mm-hmm.
Limited partners love to invest in stuff they can't get access to. So already people are like, I can't have this. I want it. And, the track record would have to be reassessed. All these things. It's a very elegant way to like navigate a transition process. And then when you tell the LPs that they're allowed into your fund, you're giving them a compliment in the process, right? And so it's that's a very savvy move, and I expect it would have very little to do with actual ethics, and it would be 100% related to a marketing stunt. There are cool ideas for impact hedge funds in the world. I remember, didn't we have Rick Bookstaber on here?
We did. We had Rick Bookstaber on here. We had Ulf Erlandson also.
That's right.
Impact hedge fund. I mean, like, I mean, they're definitely out there.
Yeah. And so like Rick's idea, which was like provide liquidity into crashing markets by spotting like those asset prices that are being slammed because of contagion rather than fundamentals. And he had this agent-based model approach to doing it. And so I think like there are ways to outperform in the short run and drive impact. I mean, that's the thing about hedge funds, right? Like time horizons are generally pretty short. Otherwise they become long only, equity managers. And so finding really impactful stuff that like meets an ethical test beyond just getting rich, that's hard, and in part you go to hedge funds in part because you just want them to focus on getting rich. So it'll be interesting to see how the season goes if they kind of if everybody's begging to stay in this hedge fund because of this little stunt.
I mean, yeah, I'll have to, maybe I will, I'll see if we can get someone involved in that show on this podcast. I vaguely know.
Maybe a cameo.
I mean, like, I would love to. One of my favorite queer comedians, Ava Victor, is on this new season.
Oh wow!
Probably familiar to some people because she did some really good TikTok videos early in the pandemic where she was talking about like the straight pride thing. She's like, yeah, I'm like, it's the whole world is like made for me, and like that's really hard. Anyway, she is now playing like an analyst at this fund that's like trying to navigate her own like ethical kind of compass as it comes to like being a hedge fund person and being also a this is like a question that I think a lot of people are debating behind closed doors right now. This last question. Do you think that institutional investors are reevaluating their mainland Chinese investments in light of what's happening in the Russian market? The economy would be much more vulnerable to the sort of tightened sanctions that have been applied to Russia. And oh, by the way, it's 32% of the MSCI emerging markets index is mainland China.
Whoa. All right. Yeah. That's big. So this is a great question because it kind of closes the circle in the beginning of the podcast, which was like, how do markets think about these risks, these geopolitical risks, and like, what are the tertiary and secondary consequences that actually drive investor outcomes? Part of me thinks that the Chinese, seeing the international reaction to Ukraine, will think twice about a unilateral invasion of Taiwan.
Mm-hmm.
That's one interpretation, in which case, if you believe that the Chinese now see that the international community would react together and impose pretty tough sanctions, including on individuals in the government, maybe they're less likely to invade, in which case you would be more likely to leave your exposure there.
Mm-hmm.
But this also goes to understanding the geopolitical risks in your portfolio, which I think investors really struggle with today.
Yeah.
All these alternative data sets are like out there, and then figuring out a way to apply it and sort and like figure out what my geopolitical risk factor, allocation is. I mean, I would imagine everybody is now looking around the world and wondering what's next. And the China stuff was already very hot because of, the issues within China, and the Uyghurs and all of the, what some people have called genocide.
Including me.
Yeah. Sorry, there's one of them. I don't know enough. So let's just call it genocide. So there's genocide.
Yeah.
That's a bad thing. And so already you would imagine people would have been reevaluating it. But like, I second guess myself constantly now, because I would have thought markets would have imploded with the invasion of Ukraine, and instead they're flat. So
yep.
Then I'm left thinking, well, what are the extra like consequences of China invading Taiwan. I assume that's what this is about, right? This is about
I think people are thinking that way, but also like, I think that like, it plays into, like Bridgewater is probably like one of the most widely held institutional positions, in, I guess, the US or the world, right?
massive hedge fund, like
Massive hedge fund. And
100
they have
billion.
huge investments in China.
Yeah.
And like I guess the concern would be like if you have currency controls in a market and you have this added level of sanctions and tension, like you have to reevaluate your exit plan, right? Your liquidity limits and stuff like that. So
Yeah.
I don't think anyone will actually do anything until something bad happens, unfortunately.
Yeah. I mean, and the fact, like, there's part of me that's like having this level of interaction and mutual reliance. It's like we are mutually assured destruction if we tank each other's economies, right? And so hopefully that's like the benefit of capitalism, is that we all rely on each other and we're not going to do anything that really harms ourselves too much. So hopefully, yeah, we get through this, but it is a bit crazy. The
Yeah.
world is crazy. I wish I knew like answers to questions, but I don't. I feel like,
But I think it's important to highlight that, in a lot of cases, the answers to this are not known.
yeah,
And like this is like what investors do. They allocate resources under conditions of uncertainty,
yeah, that's right.
and it's
So
like,
what investors do is they try to, in a little bit, I mean, I'm not trying to contradict you, but they're trying to convert uncertainties into risks.
That's
so
better
that
put, yeah.
they can take something that has like no probabilistic math around it
Yeah.
and start assigning probabilities.
Yeah.
And then think about, well, what is my risk budget? And let me allocate that around to the risks I think I've priced the best.
Yeah. And like, I mean, you got me thinking about contagion pathways, right. And like that's, you think about like, what is the contagion pathway that plays out here? And then you can actually analyze it, benchmark it and have like a non-stupid,
Yeah.
non-instinctive, a view of what might happen.
That's how that, like, for those of you out there that aren't professional money managers, like most of what money managers do is like looking at traffic jams in financial markets. Like, oh, there was an accident there, but the traffic like backed up to the bridge. Now I can't get on the bridge. And so I got to, like,
Yep.
Sounds crazy to say that, but like a lot of this contagion is like one asset price gets hammered. And
Yep.
because of leverage or portfolio rules, all of a sudden, all these investors need to change their portfolio at the same time. And then there's traffic jams and
Yep.
asset prices get hit in other parts of the industry. And that's what drives like the big drops
Yep.
that you see occasionally in markets.
Yeah. Where everyone wakes up and they're like, oh, what the heck? And now, I mean, like,
Yeah.
Speaking of, oh, what the heck, I think the most important thing on everyone's agenda is that it's springtime, it's gardening season.
Yes.
And oh boy, I mean, this is what people are really coming to. This is where we
need
lead.
a lighthearted jingle for gardening. Just kind of like take us out of genocide land into, free money garden tip,
I mean, like,
Welcome. Thank you, guys. No, I appreciate it.
yeah,
Appreciate it.
I mean, I think that the services that we do for the people are really unlimited, but
No, they're free.
they're free. I mean,
I'll tell you that I felt a warmth with that applause. Like,
Really?
I was like, oh, that does sound nice. Pretending that people are clapping for us.
oh, yeah, like those people are probably dead.
Like an 80-year-old laugh track. Keep for bringing back the tone of the show.
I mean, it's like we're out here tap dancing at the end of the world, right?
Did I tell you that I have subscribed on Twitter to my daily death reminder? Once a day, Twitter sends me a note that says, you will die someday. Because it is a nice reminder to live the day. And
Yeah.
recognize that, like, this is ephemeral, y'all. Like, we're not here forever. And, take the time to plant some plants in your garden
Yeah.
and watch it grow and sniff the outcome. Hopefully it's a flower.
Yeah.
All right, here's my tip.
Go for it.
Or do you want to go first? I sometimes get too
mean,
excited and then
My tip
jump
is
in.
very death related.
Okay, so you take it.
My big, longtime listeners will know that I am a huge bull on compost. Right.
True.
And like it's compost is a whole thing. Like when you get started, now is a great time to get started.
Really?
Now is a fantastic time to get started. And like, if you want to do it right, like if you want to get like really grinding on compost, all you really need is a shredder and a pile. And I say a shredder, because one of the most effective ways that you can get raw material for compost is to shred the e-commerce boxes that you get, and
Oh,
mix them in with green plant waste. That's what we do here. And you will be shocked at how much like brown material you can generate. And like literally, if you do nothing but mix up a bunch of cardboard and a bunch of kitchen waste, you'll have rich soil in 5 months, right?
dude.
And like and maybe even sooner if you're able to get a really hot pile going. Like if you have a lawn, you can mix in your lawn clippings.
Sorry, I love the language of
A hot pile.
The hot pile.
Yeah, how hot is your pile actually?
Jesus criminy. Reminds me of walking the dog. Anyway, let me ask you a tip right here, because I was a composter,
Mm.
and I think I screwed it up because we ended up with little like the flies that like were flying
Oh.
around,
Mhm.
and then the flies started coming in the fucking house, and we were
That
like,
sucks.
never again.
That
Never again.
sucks. Yeah.
How do you avoid those little like no-see-em flies?
Yeah. So those flies are really attracted to animal products.
Interesting.
So like, basically, I mean, the way I avoid it is not eating any of them ever, and not having them in my food waste. But
Got it.
in general, cooked things and animal products will attract pests. And those no-see-em flies are the better pests that you can get. You could also get like rats and other fun stuff.
Oof.
So
Don't put animal products in your hot pile.
in your hot pot, yeah, exactly. I mean, what you want is like a 3-to-1 mix of browns, like shredded cardboard,
Right.
and like dead plant material, to greens, which is like kitchen scraps or whatever.
Gosh.
And it's tempting to try and save everything, but as a general rule, if it's been cooked, if it's ever like had a life where it maybe had independent thought, it doesn't go in the compost pile, with the exception of eggshells, which can go in there.
Okay. Honestly, Sloan, fantastic garden tip today. Call out for you. I
Thank
feel like I'm
you.
sitting here, I've just learned a lot. And normally, we wing these things, but I think you came prepared today.
Well, like
It was
last
good.
time, as listeners will know, I forgot about the gardening tip, and
Yes, I just told people to water their plants. And I don't think people are going to forgive you for that just yet, but I'm trying to get people back on the Sloan train.
well, fortunately, the audio was really crappy at that portion of the podcast, so that's kind of like I'm like debating whether or not to just be like, guys, the audio is too bad here. Podcast.
Oh, speaking of bad audio, I've had a few listener requests to understand who our lost podcast was with.
Oh,
I've got a
really?
couple of emails being like, "Hey, who was that
The
person?"
lost pod.
Yeah, no, it's
Can we
lost.
reveal that? I mean, I don't know.
Maybe
Yeah.
some point. Not today, though.
Yeah. Well,
More of a cliffhanger.
mhm.
My tip is related to raspberries, and it was because my spouse was looking at our raspberry bush, and she said, "That's dead. You should just rip that out." And I was like, "Trust me." And I gave it a bunch of drinks, probably about a week ago, and yesterday, flowering. Sorry, leafing. Leaves
Leafing.
coming out. So never give up on your raspberry bush. You know when it looks like it's the deadest thing in the garden, it will come back. Now, I say that in California, where we don't freeze. So maybe if you're in a frozen place, the raspberries don't come back. You tell me, Sloan.
I
But
think
here,
it'll depend on your varietal. I know
Okay.
a lot of blueberries, for instance, are native to like the East Coast and Maine. So like they'll be perfectly happy, and like strawberries too. Will look like they're super dead and then come back. Totally
it's such
fine.
a shock when you see these leaves come out of things that you were so sure was dead and very, very like warm and fun to
Yeah.
like be like, "Oh my God, you were alive! I knew you were alive." You know?
Yeah, it will, I mean, speaking of freezing, like here in New York, we've had a pretty, I would say, temperate winter,
Yeah,
relative to, and like a bunch of my annuals, which are not supposed to survive, that I like left up so that insects could have habitat,
yeah,
um, I like my snapdragon stayed alive and stayed flowering the whole winter.
that's nuts.
Yeah, it's like your fabled tomato plants that,
Which has it's literally been making tomatoes all year. I have a red tomato out there right now, and it's spring now here. I think this tomato plant should go to space. I don't know what kind of project they're going to do on it in space, but it deserves a trip.
you should
If
take
Jeff
some
Bezos gets to go to space.
You
Tom
should
the
take some
tomato.
props. Another bonus tip, you take those suckers off of there. If you harvest them in the right way, I think you can just, transplant them.
For sure. That's a great idea.
Yeah, get your, Ashby's tomato
Oh
farm.
my God. And then literally Free Money Podcast could sell tomato plants that never die. Talk about a free money hack.
Talk about alpha. I mean,
Portable alpha.
oh God, yeah, exactly. You put that baby in a pot. That about does it for us
For a
today.
podcast that had quite a few, only a handful of listeners in the early days, we have quite a few inside jokes from that time period.
That's true. That's true. I mean, but like I think if
Yeah, you got to go back and listen to figure out what portable alpha is.
yeah, exactly. Or check out when our merch intern finally shows up to work.
Yeah. Are you out there, merch intern? Are you still listening?
Mhm.
Not joking.
Yeah,
Come and talk to us.
yeah. Or like, yeah. If you just have a weird internship project that you want to do for free money, like I think that would be.
Actually, yeah, any internship. Yeah, no, we just like interns. And you know what? We'll pay you. I don't like free money intern.
Yeah, you
free
didn't
money gives you free money.
Yeah,
That's
but
what we do.
I would love it if like a college student or somebody wanted to like do some kind of project on the Free Money Podcast. Anyway,
We
that
will
way-
beat the minimum wage
hell yeah,
by $1
yeah, and
or more. We'll have to
Yeah,
think
it-
about what our budget can handle.
our comprehensive kind of resource allocation framework. But yeah, that's it for us today. Bye.
Bye. We love you. Bye.
Love you. Bye.